It's just another one of the problems plaguing America as supply chain issues continue and inflation hits everybody's wallet. Inflation continues to sit at near record levels. And now experts say rising wages are contributing to inflation.
News 6's Treasure Roberts is talking to one of those experts who says the economy could be heading in the wrong direction.
An expert says wage increases are connected to inflation. So as companies give employees more in their paycheck, those price tags could continue to rise.
Thrust us into the worst depression since the Great Recession, and then trillions and trillions of dollars of spending following those lockdowns was the spark that got inflation roaring.
America has been bogged down with some of the worst inflation in decades. Economist Sean Snaith blames bad policy in response to the COVID-19 pandemic. The Federal Reserve has been increasing interest rates as they try to get a handle on it. Next up, some say they believe the Fed will urge corporations to start hiring freezes. Snaith says that's a decision businesses will have to make dependent of the Fed, but he understands why that could be a potential course of action.
The hope would be, well, if you stop hiring, that's going to stop putting upward pressure on wages.
He says wages feed into an inflationary environment, and increased wages could cause what's called a wage price spiral.
Businesses are paying higher wages. That means workers have more money in their paychecks. They're going out and spending that, trying to get stuff that's not on the shelves, and prices continue to rise.
But Snaith points out there's currently a labor shortage, saying there are millions more jobs open than workers to fulfill them. He also says the economy could be heading into the wrong direction.
Stagflation was kind of a common phenomena in the 1970s, and it refers to a state of the economy such that you have both inflation and stagnation or recession.
He says the first quarter we were in a period of stagflation. The economy shrank by 1.4% as we battled inflation.
We may have come out of a stagflation situation, but it may be a temporary exit.
Snaith says the actions the Fed would have to take to bring inflation back down could slow the economy, and that could trigger a recession. In Orlando, Treasure Roberts getting results, News 6.